I think Asia is in the news quite a lot, and the regulation in Asia around cryptocurrencies, around ICOs, around blockchain are very, very confusing. I think a lot of things get mixed up, a lot of things get poorly reported in the media, and I'm quite excited that many of you are interested in a bit of looking at a couple of countries that are in the news a lot, a couple of countries that I think are significant for these trends. And dissect a little bit in the few minutes that we have what exactly is their stance on cryptocurrencies. How do they differ? How does cryptocurrency fit into whatever existing regulatory environment they have? Generally, of course, we know that Bitcoin or Ethereum by themselves cannot easily be regulated. But what we mean with cryptocurrency regulation is most of the time how are institutions, individuals able to interact with cryptocurrencies through existing laws. How does that fit into when they do their accounting, they do tax reporting? Do they need to apply for any licenses? Do certain licenses apply to them? A lot of the difficulties often come from exchanging cryptocurrencies into fiat. They come from setting up exchanges. They come from creating payment processors. And especially in the last year, we've had this trend of ICO regulation, or this general trend of people trying to raise money. And I think in Asia there's been a lot of money going into ICOs, and some countries have been moving quite quickly in favor or against it. And when cryptocurrency clashes with securities law, things get very, very complicated, and we won't have the time to go too much into the securities, but I'll mention it as we go through these countries. I think my favorite country is Hong Kong. It is technically not a country, but more of a special administrative region of China, meaning while it is de facto a Chinese territory, it has significant autonomy and separate rules. It has a separate currency, it has separate legal system, it has separate court system. English is an official language. It is outside of the internet censorship and capital controls. And Hong Kong is a very bureaucratic country. Bureaucratic in the country is not so much ruled by the chief executive, but more is governed by a law that is executed by a large bureaucracy. I think Hong Kong's bureaucracy is very efficient. Most of these institutions are quite easy to interact with, but it is important to know that each of these institutions have their own agenda, have their own constituency, they have their own jurisdiction, and they usually wouldn't talk to each other that much. I think Hong Kong, as being very low taxes, having no capital controls, being relatively open to business, never really felt threatened that much by Bitcoin. When Bitcoin came up for the first time on people's radars, probably in 2013, when the price broke through $100 for the first time, and then 200, 300, and eventually all the way up to $1,000 in December 2013. Hong Kong didn't really feel threatened so much by these promises. There was no fear that tax revenue could disappear. There's no fear that the banks would collapse. And in that environment, they came up with the definition of Bitcoin being a virtual commodity. It's not money. It's more like digital kind of gold. And that definition has stuck until today, and that's probably the only time the Hong Kong government has ever really made a move about this. Ever since 2013, 2014, when these discussions came up, there's been absolutely no new regulation. There's been no attempts to make a regulation or to bring Bitcoin into the existing regulatory environment or licensing regimes, which means that Hong Kong is probably the most laissez-faire place when it comes to cryptocurrencies. Let's look at the institutions a bit. The Monetary Authority would be in charge of regulating banks. They're probably the most hostile towards Bitcoin, as in they don't understand it, they don't want to understand it, they know it's outside of their jurisdiction, so they don't have to worry about it. But it also means that there's a bit of a yeah, a mutual climate of distrust to cryptocurrencies, both from the banks and the monetary authority, where the banks don't really want to deal with Bitcoin companies or ICOs, and the monetary that's probably the largest drawback of Hong Kong. It's very difficult to get bank accounts, very difficult to establish any kind of institutional relationships with financial institutions. And of course, we can complain about this. We have complained about this to the monetary authority. But there's a bit of an agreement between the banks and monetary authority. Say, well, it's not really. Both of them say it's not really our fault that you can't get bank accounts. It's the bank's fault or it's the government's fault. But we're also not really unhappy about the situation, so we're not going to do anything. The Customs and Excise Department is a part of the Hong Kong Police. The Excise Department would be in charge of commodities trading. They are also in charge of the money service operator licenses and the money lending licenses. The police has clarified that neither of these licenses apply to Bitcoin, meaning if you are trading Bitcoin and you want to apply for such a license, the police will probably deny you that license. But it also means that if you want to trade Bitcoin, you don't need any of these licenses, and the police will not. The police will not come after you for not having these licenses. I think that's quite a satisfactory situation. It means that starting an exchange in Hong Kong or starting a brokerage or trading is very, very easy. It requires absolutely no paperwork. You can just get started with it. All you need is a couple of Bitcoin in your account or a couple of Hong Kong dollars, and you can start trading. Theoretically, some existing regulation would still apply. You would still have to fulfill some basic KYC and fulfill some basic AML. And it's not clear at all what this really means. Most ATMs in Hong Kong do not require any ID or do not collect any information from their buyers. Some brokerages that exchange cash to Hong Kong dollars do, some don't. It's not really clear what effort you have to make to fulfill those requirements. Fact is that nobody has been prosecuted in Hong Kong in the past 4 or 5 years for money laundering in any cryptocurrency-related case. And the police is generally quite easy to deal with, actually. They have quite a nice customer satisfaction mentality. The Financial Services and Treasury Bureau would theoretically be the one initiating new legislation. That's sort of the ministry, right? So I do believe that eventually in the future we will have a special licensing regime for Bitcoin businesses, for brokerages, for OTC traders. That is very similar to that Forex offices have, meaning a money service operator license. If you use Bitcoin to facilitate remittances, you're probably eventually going to have to obtain a kind of license. Looking at what these licenses are today, that won't be too much of a big deal, won't be very restrictive. Not looking forward to it either. I think the Securities and Futures Department, they're not called the department, they're called the Securities and Futures Commission, the SFC. They are a relatively young organization, a relatively young department of the Hong Kong government. They are probably by far thinking the most about cryptocurrencies. They're by far the ones like reaching out to us the most, being in, sometimes informal discussions, attending conferences. They would legislate some of the more complicated things. For example, futures trading. A exchange that starts up in Hong Kong would not need a license at all about offering cryptocurrency to fiat pairs, but whether they need a license to offer futures trading is probably a difficult legal question, and in the long run, definitely yes. Any kind of leverage products, products that include lending, will be regulated by the SFC eventually. The SFC is also in charge of securities, meaning many securities tokens, definitely, but even many utilities token would fall under their jurisdiction. Hong Kong security regime is far, far more permissive than, for example, the US would be, meaning the definition of what a security is far, far more narrow. There's not, I mean, it's similar to a Howey test, but there's a far more of a closer definition, meaning your utility token is far less likely to be deemed a security. There's another definition of the collective investment scheme. Collective investment schemes are something that probably even most utility tokens would fall under, but they're still not very tightly regulated. Usually what people do in Hong Kong is they issue their token in Hong Kong, which is legally quite easy to do. There's not so much of a regulation around who can issue securities. There's more around the regulation around who can trade securities, who can offer securities, who can sell securities, who can advertise securities. Meaning that if you were to advertise your token on a tram and sell it in a shop, then you'd probably be in trouble. But if you only talk about this token in a technical context at conferences, and you would only then sell it to high net worth individuals or accredited buyers or financial institutions, then you're probably fine. The taxation part is a very easy thing in Hong Kong. There aren't any duties on these virtual commodities. There are no sales taxes, meaning you don't even have to worry about how to report cryptocurrency purchases. Trading, so there are no capital gains taxes either, meaning if I buy a Bitcoin today and it depreciates in value, you don't have to pay tax on this. If I professionally trade Bitcoin, if I have my income through trading online, then it becomes a bit more complicated, because then that's suddenly my profession, that's my income, and then I might have to pay income taxes on this. A couple of people are using relatively complicated structures that allow you to, so there are a couple of jurisdictions in the world where this would not be taxed at all, and Hong Kong does not tax any foreign income, meaning through a complicated construct, people are trying to push their income overseas where it's not taxed, and then remit it into Hong Kong as dividends, which are not taxed either. Hong Kong is in the context of a couple of neighbors. I think Singapore and China are the most interesting to compare to. China mostly because Hong Kong is de facto part of China, because Hong Kong is a base for plenty of Chinese companies, for Chinese individuals, investors. Most of the Chinese exchanges have moved into Hong Kong over the last year. Most of the Chinese ICOs are conducting their conferences and conducting their sales events and their ICO sales in Hong Kong. Singapore, so Hong Kong has not done anything since 2014, and what they did in 2014 is such a minor move that didn't really have a big impact on how cryptocurrency is treated in Hong Kong. And Hong Kong is known to be an incredibly stable and predicted actor. And this is quite in contrast to Singapore. Singapore is much more, I think the Monetary Authority is the only one that's really relevant in driving regulation. The Monetary Authority is in charge of everything, unlike in Hong Kong, we have different departments. The Singaporean government is a unified single organization that is able to steer Singapore quite quickly into separate directions. And they've been doing this plenty of times. In 2014, when Hong Kong made their small definitions, Singapore was moving quite in favor of cryptocurrencies. They made it very easy for example, exchanges to set up bank accounts. A lot of exchanges would set up there and be far more successful than their Hong Kong counterparts. In 2016, 2017, Singapore is a very favorable place for ICOs. They've welcomed projects with an open arm and certainly gave them the feeling that they're welcome in Singapore. I think that makes them, they're very unpredictable. If they want to do something, if they want to change their licensing or legal requirements, they are able to do so. In Hong Kong, nobody's able to change anything. Even the chief executive, if she wants to introduce new Bitcoin regulation, it's very unlikely to succeed. The big benefit of Singapore is that they are actually likely to come up with some kind of licensing regime for exchanges, meaning securities exchanges. And that's very unlikely in Hong Kong. Singapore, in short, really nobody knows what's going on. In China, nobody knows what's going on. I think the fact that exchanges have been shut down is a good indication that they're being banned, but there's not really any legal, rulings about this. There's not really any law that has been changed. The over-the-counter, the OTC market is still very active, liquid, works well, requires a few tricks to not have your account shut down, but it's still incredibly easy to buy and sell Bitcoin. China and Korea, I used to put them together. I think they've diverged quite a lot. Korea is, again, has four large institutions that would be in charge of regulating this, and I think they all have different agendas. They're all quite diverging from how they look at it. While in Japan, there's only one authority, and they do seem to have a coherent idea, a coherent plan of how to regulate this. My time is unfortunately up. Thank you very much for listening. I will be around all day, so come find me anytime, or write me an email, or hit me up on Twitter. Thanks a lot.